Okay, so welcome everybody to the Agora Sessions, and thank you so much for joining us today. We are super excited to start our very first Agora session today. My name is Enrique, but everyone calls me Kike, and I, alongside Sophie,
hi,
will be our hosts today. We welcome Mati as well, that is going to be our tech master in the end. Before anything else, I would like to thank everyone who is and was involved in this project and made it happen. This is a collaboration between the communications, marketing, and people and culture departments. We all came together to bring you the Agora Sessions. Today, we have people from the Philippines, Pakistan, Qatar, Spain, Italy, Venezuela, Argentina, and so many other countries around the world. So please, let's give us a round of applause to all and get this thing started.
Thanks, Kike, for that intro. So first of all, I think it's wise to let everybody know how these sessions are going to be structured. Everyone is going to be muted during the whole presentation, but of course our chat is going to be open, so feel free to write any comments you like and ask any questions you may have during the presentation, because after presentation is over, we will have a space, a 10-minute space to go over all your questions, and our special guest will answer them. So Kike, you told us these sessions are called Agora, but why Agora? Can you tell us?
Sure, I can tell you, but why don't we better ask the audience? Guys, what do you think Agora means, and why did we use this kind of word for this session? Please don't Google it, just write your first thought in the chat and get creative. Okay, we got now in Portuguese. Yeah, I feel you. The first time I was doing Agora sessions, I was like, yeah, agora means like now in Portuguese. But no, that's not it. Sophie?
No, I really don't know. Can you tell us?
So I think Danilo that says that he's Greek and he will skip it. He just know it. So I'll just get to the point. Agora in ancient Greek was a public open space used for assemblies and markets. Okay. Project Agora offers a sociable and collaborative alternative to traditional classroom-based learning through workshops and webinars. It aims to foster culture of learning and knowledge sharing within Athyna while encouraging teamwork, professional development, and good times.
Awesome, Kike. I love our session's name. And let me now introduce you our very first guest, Alejandro Ortega. So as you all may know, Ale is our superstar product manager. He's from Nicaragua, but lives in Buenos Aires, Argentina. He has been working with us since January and has worked in the past in amazing companies such as Accenture and Globant. And nowadays, he's finishing his master's in finance, so he's an expert in this topic we will go through today. So Ale, thanks for joining, and the mic is all yours.
Yep. So thank you so much for that presentation, guys. And thank you as well to the production team of Athyna, marketing, and everyone else involved in making this awesome. So thank you so much. I think that we can get this show on the road. So we'll be talking a little bit about investing. What is it? How do we pull it off? And what are our different options? So showtime. So what exactly is an investment? Yeah, an investment is an asset or an item acquired with the purpose or gain to generate income or to appreciate over time. I mean, if you have ever seen a painting, you know that paintings usually appreciate over time due to the value itself as an item that it can has a historical meaning, or maybe the value itself, taking into account the painter, can explode in a few years' time. For example, take a look at Picasso, Monet, and all all of those items we could say are an investment if you learn to figure out which painting can be valuable, because I can paint something myself, but maybe nobody in the world will care about that. So yeah, an individual purchase is something that it's for you mainly. Let me give you a quick example. So unfortunately, I don't have the best skin, so I tend to get sunburned a lot. So I need to buy some sunscreen just to protect myself from all the sun and everything like that. And because of that, we could say that this is something that I purchased for myself. This is not something that can be appreciated over time. This is completely different from something that is a bond. Sophie, do you know what a bond is?
Of course not. Can you tell me?
Of course not. Okay, so no worries. So a bond is something very easy to understand, because let's say that I need money. So, and you're planning to invest some money. So we're going to make an agreement, and you're going to lend me $100 in exchange for me to pay you annually an interest rate of 10%. The 10% of $100 is $10. So that is our agreement. Our agreement is of about 5 years. And at the end of each year, once again, I'll pay you those $10, equaling the 10% interest rate. So at the end of those 5 years, I will have completed paying you all the interest rates, all the interest that I was supposed to be going to give you. And at the same time, I need to give you back your money. I mean, because you lend me the money, I need to give it to you by the way. So a bond is very similar to what I was saying. Now, there's a risk here, because what happens if I go broke?
I will tell you, probably.
What happens if I tell you, no, look, I'm going to go bankrupt. I don't have any money. Ortega LLC and Associates cannot cover that amount. I mean, that is exactly what happens when a bond goes, it simply explodes. I mean, when you cannot pay back your loan, or you cannot pay back that specific bond. And that usually tends to happen in some companies that are performing very poorly, or countries that are performing very poorly. So yeah, there's a huge difference between something that you purchase for yourself, such as a sunscreen, and a bond. As you can see, it will generate you income, the bond. But unlike the sunscreen, this is not something for your personal purpose, for your personal purchase. Yeah. Okay, so let's go to the next one. So first thing first, something that you need to do when investing is have some financial order in terms, if you have debts of around, I don't know, 3 times your income, let's say that you earn $1,000, then you have a debt of 3,000, you need to pay those interests as well on that specific debt. So taking into account that it's so hard sometimes to make, to generate income through investments, you know that it's advisable that you first cancel that specific debt, then go to invest. Then if you want to invest, go right ahead. But because there's uncertainty related to investments, you know that you need to pay that debt either way, because otherwise, I mean, your financial credit will simply explode, or bad things can happen if you don't pay that. So you need to have some financial stability, some financial order. And at the same time, it is very advisable if you have as well some emergency funds. So an emergency fund, let's say that, I don't know, we have an accident or something like that. You need some money set aside just to cover those specific hospital bills or anything else that might happen in the future. So it's advisable if you have an emergency fund of around 3 to 6 months just to cover that specific need. This is something that is called liquidity. You need to be able to have liquidity in your life, to have disposable income right away that you can use. Okay, so having an investment plan. You need to have some sort of a structure. You need to say, okay, so there's a huge difference between professionals in, I think, Latin America and the US. When you're a professional in the US, usually it goes hand in hand related to retirement. So people in the US tend to focus a lot on retirement because they don't have a social security pension or anything like that if you're not a policeman or something like that. So you do need to care quite a lot regarding retirement. So you need to invest in stuff like Wealth IRA, 401k, instruments that are specific to your retirement. Those are key. And in Latin America, we should also incorporate that as well. I mean, it's very important for you to know, okay, this is for retirement. This is for savings account that I need to purchase because I need to purchase a TV or something like that. Small purchase or thinking long-term, either way, you need to have an idea regarding how you're going to structure all of that. So professional guidance. Let's go to the next one. Professional guidance. So we are in the era of internet. I mean, this is the time of the internet because you have TikTokers, you have YouTubers, you have people that have no idea of what they're talking about, and everyone can say anything. It's the internet, free speech. So unfortunately, that causes a lot of confusion. That can cause you to buy something that it wasn't meant for your risk profile, because let's say that you're 60 years old and you're going all in stocks. Stocks can go up and down. I mean, unlike a bond that, like I told you, it seems a bit more stable. You should be investing more in bonds than in stocks when you are at that specific age. But of course, this is not something that is going to tell you someone in a 30 seconds TikTok video. So hire a professional, hire somebody that knows what they're doing, that has been through the hard times when investing, because experience does matter. I mean, when you have been through the 2008 crisis, or maybe here in Argentina, I mean, I bought a couple of Argentinian bonds that were linked to a specific interest rate in 2017, and man, did I get crushed. Of course, you tend to learn from those mistakes, but you need to kind of manage your risk. So focus. There's a lot of people that, I don't know, kind of get interested in investing one day, and all of a sudden the next day they simply aren't, because they were considering, I don't know, I'm going to get rich right away, or maybe this is too hard. I mean, if you tell somebody that they need to fill out a couple of forms to to open their account in a broker in the US, which is one of the most advisable things that I can recommend, in a broker in the US, and they need to fill out a couple of forms and they are discouraged by that aspect alone, it wasn't meant to be. I mean, you gotta stay focused. You gotta, you need to invest every single month over an extended period of time, because that is something that is going to be that is something that is going to accumulate over time because you have interest rates that usually tend to accumulate over time, because you have because you can dollar cost average whenever a stock is going down. I mean, you have stuff that is fundamental in order for you to invest. You first need to focus, so that it's something extremely important. Then we have comprehensive investments. So I'm going to ask you the following. Do you know the difference between, I don't know, an ETF and a mutual fund?
Oh no, Ale, you got me here.
Okay, so do you know what a 401k is?
I don't.
No? Okay, so a lot of people tend to invest in stuff that they don't know anything about. For example, Dogecoin. Dogecoin was created as a meme coin, and yet everyone else last year was crazy around Dogecoin. But you do realize that this is a cryptocurrency that was created specifically as a meme coin. So therefore, it all depends on the hype. I mean, it all depends on how valuable this thing is socially rather than fundamentally, the fundamentals of the cryptocurrency itself. I mean, once again, people they get stuff out of the internet, they try to pull it off, they say to themselves, okay, this is going to work, but later on it doesn't. So you gotta be very careful about stuff like that. You need to understand truthfully what you're investing in, and you need to have at least a sense of, okay, I'm going to make a deep dive into this subject for the first couple of months or maybe first couple of weeks, because your main focus needs to be around your job. I mean, this is only a side gig. So really, I mean, if you were to ask me, do I need to buy a book related to, I don't know, product design? Or do I need to buy a book about investing? No, buy a book about product design. You can later on hire a professional to do that work for you. So you can dedicate some time over this, but don't go crazy. Still, you gotta dedicate some time if you truly want to invest in something meaningful, because we're here to invest in meaningful stuff. We're not here to follow the hype or anything like that. Okay, so as you can see, we have here Mr. Kraft. Very funny image.
That's it. So this is our trigger. So that tells us that we've reached a point where, after all the information that Ale presented, we can ask you, the audience, what would you do with an extra $1,000? And here's the poll. Would you rather invest them maybe in Athyna stock? Would you rather spend them partying with Andy, for example? Or maybe you can just put them to sleep under your pillow? Please vote, 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 and let us know. Okay. Ooh, a lot of people like it. So I think we all know what Ali would do with that money. But Sophie, what would you do with $1,000?
Of course, partying with Andy, or I don't know, buying some new clothes. You already know me, guys. What about you?
I'd actually call Ali. I mean, he's the master in the topic, so I'd actually call you, Ali, and invest my money in whatever you say. So you better be right. Okay? No pressure. No pressure.
Okay. Thank you so much.
So we got 33 persons that actually voted. Thank you for that, guys. And Ale, it seems that your presentation is starting to make some noise, because more than half of them would actually invest them in Athyna stock. So Doc, congrats on that as well. And the rest of them, it'll be like half and half. Put them under the bed, and some guys would actually go partying with Andy. So Andy, you know it, next week, you got to organize something, because, man, at least go get a beer. I know, whatever.
Yeah. Alrighty. So moving along, we have here the different investments, the different investment type of. So as you can see, we have stocks that I think that you're kind of familiar with stocks already. A stock, it means that you're an owner of that specific company. I mean, you have a very small percentage if you only buy one stock, but you're still an owner of that specific company, which that will allow you to, for example, I don't know, every now and then you will get a message coming from Apple, and this is a true message. I mean, they will tell you, hey, look, would you like to change Tim Cook, or would you like to change the chief marketing officer, or stuff like that? They're asking you for your opinion. Why? Because once again, you're a stockholder. I mean, you have an ownership in the company, a very small percentage, because if you have one stock over a gajillion stocks, yeah, but still, I mean, you have responsibility over that company. And at the same time, you're, as a proud owner, you benefit from the stock having gains. For example, a stock can pay you a dividend. Did you know that, Sophie? The stocks can pay you a dividend. Do you know what a dividend is?
Oh, yeah, Ale.
No.
Your questions, please. No, I don't. Sorry.
No worries, no worries. So a dividend is cash flow that is generated from a company that can be dispensed to investors. So for example, Apple stock. Apple has a dividend, which means that they will pay you an annual percentage of what they earn. Okay, so let's say that, for example, in the case of Apple, I know it's 0.76 or something like that over the price of the stock, which is translated into, how much is Apple right now? I think it's 160, 170. And that's around, I don't know, $1.20. And you must be saying, $1.20 annually? That's nothing. I mean, can I even buy gum with $1.20? I don't think so. But if that is, of course, with one stock. Imagine if you have 100. Imagine if you have 1,000 stocks. And imagine if you compound that over time. And this is only one stock. I mean, and this is Apple. Other stocks pay you more dividend. But of course, there are some stocks that don't pay you dividend at all. For example, Amazon. Amazon doesn't pay you anything related to dividends or anything like that, because those type of the dividends that they will pay you, they reinvest them on the company itself. So it accrues over time, and it tends to, they create better stuff with your dividend, which this is not something that is bad. It's just a different way to do business. Okay. Then you have ETFs. So an ETF is, you have one stock, but that specific stock may be, for example, in the case of Zoom, have you ever seen Zoom stock? I mean, the stock simply crashed. Let me know if you guys can see it. Can you see it?
Yep.
Okay.
Yep.
So as you can see, 6.35 is up today. Great. But if we see it over time, I mean, the stock just crashed completely. I mean, we're talking about 81% loss. So if you bought it here, I mean, you simply got completely crushed in this stock. And this is the risk of investing in one single stock, putting all your eggs in one single basket. So the way you need to do it is, instead of buying one stock, why don't you buy the whole index in which the stock is allocated? I mean, why don't you buy the whole market? So that's why you have the S&P 500. The S&P 500 is the 500 most important companies, and that trade in the NASDAQ and the NYSE, the New York Stock Exchange. So those 500 companies, you can buy them at a single index, and that will allow you to later on be more diversified, because you will not be buying one single stock that can crash right away. You will be buying the whole market as a whole. So if the market goes down, yes, you will go down with it, but unlike stocks, you're at least you have more coverage. Okay, that is, once again, that is the XPX, Standard & Poor's 500. You have an index fund which is called SPY. As a SPY, you know, if you look it up, you will see that specific ETF. So once again, ETFs are a mix of different stocks. You can also have ETFs related to bonds, but they are combined. There are a lot of different, you don't buy one egg, you're buying a whole different set of eggs. Bonds, we already talked about them. Cryptocurrencies and real estate, I think that we can cover this in another presentation, just because it can be quite complex, a little bit tricky, so we can leave them out for later.
Sure.
Yeah, so investor traps. The first one is FOMO. FOMO for everyone is fear of missing out. I mean, I remember I had a professor in wealth management that the guy actually managed to, he handled the money of people that, I don't know, were earning stuff like $100,000, $1 million annually. I mean, they were very big fish. I mean, they truly had a lot of wealth. So he told me that in the start of 2021, and a lot of people were trying to buy into Bitcoin and into cryptocurrencies, because they thought that they were going to miss out on an opportunity that was the opportunity. I mean, that was the moment for everyone to buy into cryptocurrencies. I think Bitcoin was trading at around 62,000. And all of a sudden, as you know, Bitcoin started to crash and it's now in $39,000. So, I mean, a lot of people tend to do that. They think, okay, oh no, this is an opportunity once in a lifetime or something like that. Don't worry about it. I mean, the media sometimes, and it simply tries to amplify the extent to which something is valuable. So don't worry. I mean, you will have a lot of once in a lifetime opportunities. I can assure you that. So yeah. Now, waiting to get even. As we saw recently with Zoom stock, I'm going to show it to you once again. If you bought it here at $559 and you're here, I mean, it's simply the number for you to go back up. Let me do the math real quick. So here, 559 divided by 105. Okay, plus 1. Multiplied by 100. So that means that the stock will need to increase 432% for it to go back to its previous levels. 432. That's a huge number. We're talking about 5 times almost. I mean, 5 times. I'm going to put you a quick example. So you were in a relationship, Sophie.
Yeah.
This person cheated on you.
Oh my God.
Impossible. I mean, you know,
Wow.
cheated on Sophie. I mean, I don't
Never happened.
Yeah, it simply cannot happen. So in order for you to regain his trust, he needs to do something extraordinary. I mean,
of course.
Yeah, I mean, he needs to knock it out of the park right away. I mean, he needs to, I don't know, buy you a yacht, give you $100 million. I mean, he needs to do something radical, something crazy for him to gain your trust back, right?
A lot of love, of course, more than material things.
The same thing happens here. I mean, you need to regain investors' trust so that if you bought the stock at 559, the stock needs to go back there. So they need to pull out some incredible earnings or reduce their operation costs, and I don't know, something extraordinary as well for the stock to be fundamentally sound for you to regain their trust. Because currently, I mean, the numbers simply don't add up. So as you can see, I mean, it's very hard for you to invest in something that is truly meaningful sometimes, but this is because you're buying into one single stock. Once again, when you're starting out, you don't know where to look, where to find. I mean, if you're starting to date, I mean, you pick the first person that ever comes into your life. So you need to get acquaintance. That the same thing happens here. You need to gain some trust, get some ground field. So it is truly advisable if you go into ETFs first, then go into single stocks, because you will be more savvy. You will tend to recognize a little bit more these once in a lifetime opportunities. Okay.
Perfect. Understood.
Okay. So failing to diversify, as I told you guys, I mean, whenever you don't buy one single stock, once again, you bought a different type of asset class for you to have a better understanding of if something goes wrong, then you can compensate with another thing. I mean, let's say that the entire stock market is going to crash, and you still have bonds, which can maybe cover some of your losses, can offset some of your losses, or simply offset some of the losses as well. So letting your emotions rule you. I mean, if you see the stock going up, and you're saying, okay, this is going to the moon, so I'm going to start buying this right away, you're letting your emotions rule you. You're not seeing the fundamentals behind it, not doing due diligence. I mean, if you're taking a look at, I don't know, let's say Nikola. Do you know what Nikola is? Nikola is one of the worst companies that have ever crossed the stock market, because they were trying to create a truck that was run with water only. I mean, it sounds crazy, but that's the reasoning behind it. So the stock traded at around $80 or $50. I mean, something completely crazy. And they never sold one single vehicle. We're talking about a valuation of $2 billion. They never sold one single item ever. I mean, and the stock simply went parabolic. So did people really realize this? I think they didn't. So as you can see, I mean, you need to truly make some due diligence whenever you're trying to invest in something, and not only in stocks, but real estate, if you're trying to open a business, you need to have a true understanding of your competitive advantage, what exactly is involved in everything related to that specific market. You need to do some homework. Okay, so misunderstanding your investment. Sometimes whenever you're trying to invest in something, you don't understand the reasoning behind the economy and the stock market itself. So you truly need to recognize everything that is related to your investment. It's a trap. So in conclusion, if you're looking to be a millionaire, you need to make some meaningful investments. If you trade it well and you have some wins, you need to analyze those wins. If you made some mistakes, learn to recognize those mistakes, fix them right away. And please do not get carried away. Because remember in March 2020, whenever the toilet paper issue, that you went to the supermarket and everyone was buying toilet paper. Investments are also like that. I mean, people, I don't know, see a bar in one block and they say to themselves, oh, I need to open a bar. So you start seeing a trend. Everyone is starting a bar in the block. And this is because this is something that is trending. This may not be suitable in terms of fundamentally sound or economically wise. So yeah. And I think that we're reaching the end, if I'm not mistaken.
Yes, we actually are. So first of all, Ale, thanks for the presentation and thanks for your time. So now, guys, is the time for the Q's and A's. So I'll read all the questions that were written while Ale was presenting, starting for Andrew from our recruiting team. He asked if the NFT would be considered inside the cryptocurrencies category.
Sorry, can you repeat that one?
Sure. So Andrew asked if the NFT would be considered inside the cryptocurrencies category.
Yes.
Okay, great.
Yes, remember that NFTs depend on the hype specifically around in that specific NFT. So let's say that you have Ape Monkey as an example. Everyone's trying to get one because it's considered extremely valuable and rare, but you have other NFTs that simply aren't worth nothing. So either way, if you have something to put into open market, into open seas, I mean, put it and let's see where it takes you. Okay, great. So then we have a question from T, from People and Culture, and she asks about the ETF. She asked if you have any recommendations about ETF. Yeah, so when you're first starting out, once again, ETFs are the way to go in terms of you can start buying XPX, which is SPY ticket, SPY, but you have one that is a bit more competitive, which is the BOO, Vanguard ETF. So you can start buying that one. You need to follow the XPX, the SP 500. Currently it's down about 10% from all-time highs, but you can buy as well NASDAQ, NASDAQ is down around 20%. Of course, you have inflation going around, so that can be a bit tricky in the sense that whenever you have a lot of inflation, growth plus stocks and technology stocks tend to fall, but over time it is considered that it will get back up. So yeah. Okay. XPX, NASDAQ, those are recommendable. Great. So the next question is from Kuku, our creative director. She asks, what would you recommend starting with if you had only this Agora's knowledge, like
what would be the first steps of start investing?
Okay, so first of all, you need to fill out an investor profile risk management. You need to fill out an investor risk test. So if you look into the internet and you put investor risk test, start with that. It's going to give you a profile of how much do you need to invest and in what items. Then you need to have an emergency fund of, once again, at least 3 to 6 months. But if you consider that's too much because you don't think it's necessary, so maybe you can have an emergency fund of 1 month. I don't know, whatever you think will suit your need in the long run. Then you need to open a broker account. Broker's account, you have a lot. For example, you have eToro, you have Interactive Brokers, you have TD Ameritrade. TD Ameritrade is the one for professionals, and it's the one that I truly recommend because it has lower cost. They will not charge you anything. You have level 2, and it's way cheaper. Yeah, you have also Robinhood, which is very user-friendly, but unfortunately, this is not for everyone because you need to be based on the US.
Okay, great. So then we have a question from Ivan from our sales team. And he asks if you have a watch list of stocks.
Yes, I do have one. I really like Intel. I really like that company because the stock has been crashing for quite a long time, but the fundamentals are extremely strong. First, they have a lot of cash flow. They are investing aggressively into into having their own plant in the US, and they're trying to hire the best type of people to create some meaningful chips. So I think that Intel has a lot to offer. A lot of different analysts also recommend buying Intel, and they are on track. I mean, if you make a DCF valuation, which is the proper way to value some of these type of stocks, you will get, I don't know, a gain of around at least 30 to 35%. That is what analysts estimate.
Okay, awesome. So here's the last 2 questions. One's from Doc, and he asks, what does your investment portfolio look like, Ale? And what's the composition of it?
Yeah, so we have around 20% in liquidity. Liquidity is not that I have the money. I have the money to, if I have an emergency or something like that, to dispose right away, but it is stored in different crypto accounts because crypto is currently giving you quite a lot for stable coins, around 10%, 15%. So I have liquidity, but deposit in different crypto brokers. Then I have around 30% in bonds, high yield saving bonds, which are mixed between Argentinian bonds and European bonds. And I also have 50% in stocks, which around 25% is, I think it's only for ETFs, and the other 25 is for different type of stocks, growth stocks mainly, because I have an aggressive style of investing.
Okay, great. So the last question of all is from Jan, from our sales team as well.
Tino as well has some questions.
He just write it down, but I got this question from Jan from the past. He was asking who else will party with Andy. You know, if you are gonna party as well, Ale, or if some others are gonna party. You tell me, Ale.
Let's go. Yeah, I'm all in, baby. Yeah.
Okay, great. And the last question the last question from a guy called Argentino Molinuevo. I don't know if you guys know him, aka Tino. He's asking me with some pressure, just want to mention the pressure, that if any stable coins giving interesting yield for you, Ale.
Yeah, so you have Terra, which is currently giving you around 20%, if I'm not mistaken, or 19.5. It's considered very stable according to the crypto community. And you can also have some yield in Nexo, BlockFi, and Celsius as well. Celsius is giving you around 7.10, but the interest rate is paid weekly. And Nexo, I think, is the way to go. Nexo or BlockFi, between those two, I will certainly look up those two. If you want, I can give you some referral bonus so that you can get started with those brokers. But yeah, those are giving you very interesting interest rates.
Great. So now that Tino is not putting any more pressure on me, I will thank you, Ale, and everyone that is connected over here to participate in the first Agora session. Thanks to our guest. Thank you, Ale, especially. And thank you all, guys, for being here. Now you are going to be unmuted. If anyone wants to say anything, feel free to do it. Please don't pressure anyone, especially me. I'm kind of afraid. And thanks again, guys.
Yep.
Thanks, Ale.
Thanks, Ale.
Yep, no worries.
Ale, I have a question. Ale,
Yeah.
I have a question. Can you repeat the name of the broker account that you recommend besides Citro, Interactive, and Robinhood? Because I didn't get the name.
Yeah, it's TD Ameritrade. I can send you a link later
Yes,
on.
please do. Yeah, TD. Hold on.
TD Ameritrade, yeah. You
Thank you.
fill out some forms, and I don't know what's your passport, but you need to be, if you're from Venezuela, Russia, or something like that, you will not to get an account there. Sorry.
Oh, okay. Well,
Because yeah.
Because I actually want to start, but I have like little knowledge. So this was.
If you're from Argentina, you can, but there are certain countries that will not allow you. Okay.
So thanks again, guys, to everyone. Yeah. We were like a lot of us. So thanks for participating. Thanks for your answers. Thanks for your questions. Sorry. Thanks for your time. And if anyone else wants to say anything, please unmute yourself and just say it out loud.
Hey, Kike, is there a particular reason you're speaking like Alfie Solomon from Peaky Blinders, or is it all the time you're speaking like that?
I have to admit that I've been watching Peaky Blinders the last couple of weeks. I won't lie. Thanks for the question. I recommend it if anyone else was thinking about looking at it. Just go ahead, look it. Maybe you can get some Birmingham's accent as me.
Okay, sounds awesome.
Okay, so guys, if anyone else won't say anything else, feel free to keep doing your thing. Yes, Doc has a kind of Tommy Shelby haircut. That's he was looking, he was watching as well. So thanks for your time. We'll see you again next month for the Agora session number 2. Okay.